first question, Mr. Suresh Senapaty, congratulations. You will now have some time to spend with family and with yourself. Quickly, we have seen you at the helm over the last couple of years. What is the plan now? And, as you leave Wipro, is Wipro right now positioned to be able to capture a larger market share? Last 2 years have been about restructuring, about, realigning your verticals. As you leave the company, is Wipro well poised to grab larger market share from your peers?
Absolutely. I feel very positive about it.
Okay.
Q3 has been a good quarter for us, both in terms of volume, in terms of the top end of the guidance, and margin did not decline significantly despite the fact that it was such a headwind with respect to cross currencies. And we delivered 3.7% growth, and across the verticals I think everybody has delivered good growth, including GA, IT, infrastructure, BPO and the India Middle East business. So given the fact that what we did in Q2, what we did in Q3, given the fact that on a constant currency basis we are north of 9% on a YOY growth, net income growth has been about 9% compared to last year, and the pedestal that we are in, except for the oil and gas piece, which is currently in a very volatile mode, having oil prices dropped from $100 to sub 45, it gives me a lot of confidence that we are on the right track. We are on the right track vis-a-vis simplicity exercise. We are on the right track vis-a-vis productivity exercise. We are on the right track in investments and technologies. And if we stay this course, we'll definitely do well. And I'm very convinced, as an accountant, I'm used to this going concern concept. So just because I leave, and when I leave, I find this is the dynamic leadership which will take the company much more forward than we have done so far.
Okay, fair enough. TK, quick question to you on the guidance. Excellent set of numbers. I don't mean to nitpick, but guidance is slightly lower than what the street was expecting. Is this owing to the pressure that you're seeing in the energy and utility space? And if yes, for Q4, what is or if you could just quantify the kind of impact that you are expected from that vertical?
So, we don't typically quantify the delta that we get from a particular vertical, but I'll just give you a sense. This particular quarter we have factored a decline in our energy and utility business, and that is based upon what we expect to see with oil prices coming down and the impact that would have on capital expenditure projects overall. So a decline in our energy and utility business from the last quarter has actually been factored into our guidance in this particular quarter.
Okay, we also have Jatin Dalal, the incoming CFO of Wipro, with us. Jatin, you learned the ropes from Mr. Senapaty himself. So I'm going to, pose the margin question to you. Breakup margins for me, 21.8%, in line with what we were expecting. Yet, the currency volatility and the hedging strategy seems to be a bit of a niggling worry for margins. Going ahead for Q4, I understand no guidance in terms of your margins, but how is Q4 looking like? Would you be able to beat the headwinds that margins are clearly witnessing?
Yeah, so I think Q3 has been in a very narrow range of our Q2 performance, and to that extent, I would say it's a consistent delivery on operating parameters and operating margins. As I look at Q4, we don't guide on margins, but certainly I would say that if you look at our track record, we have remained consistently in a narrow band in a shorter term, and we have maintained that in medium to long term there are significant headspaces available to us for us to push the margins up. But in short term, it would be a factor of operating parameters for Q4, and we expect it won't move materially from the ranges we have been operating in.
Okay, fair enough. TK, quick question to you before I go to Saurabh. Consulting seems to be very volatile. So if I look at the last 1 year, last quarter it was down, whereas the quarter before that it was actually up by 4.5%. What is the trajectory as far as consulting is concerned? Is that expected to remain volatile?
So last quarter we were affected by consulting primarily around the fact that we had some projects for which we could not bill.
Okay.
We see growth coming back this quarter, but it's been lumpy growth. Clearly, from our perspective, we are aligning consulting today with more and more re-engineering projects as we continue to execute them. Revenue would continue to be lumpy for the next couple of quarters. So, at the end of the day, I'm not particularly concerned by the consulting revenue itself. The revenue is not substantial for it to make an impact. Really, for me, the biggest impactor is the follow-through revenue that we're supposed to capture through consulting. Are we capturing that or not? And that, as of now, looks fairly steady.
Okay. Saurabh, attrition is at 16.4%. It has been high for the last 2 quarters. Typically, I do understand that most of your peers, including your immediate peers, do typically prefer to stay within that 11 to 13% comfort range. Q4 would be slightly stronger as far as attrition is concerned. Can we expect Wipro to be able to go back to that range?
So, attrition, if you look at it for the last two quarters, it has been sequentially becoming better and better, and we see that trend going into Q4. Very, very clearly, we are comfortable the way it is going. There are some certain pockets in the organization, some certain skill sets where we are focusing on to make sure. But overall engagement levels, overall attrition numbers were in a very narrow band over the last 3 quarters, and we are confident we'll be able to maintain this as we move forward.
Okay, utilization as well, fairly strong for this quarter. Would you be able to see an increase going forward? Because Q4, of course, is strong.
Yes, utilization also for the year, if you see, we have, over the last 3 quarters, we have seen very clearly an improvement. And operationally, we are very focused there on utilization. We feel there's headspace for us to improve it further. So we'll be at it, and in the coming quarters, you'll see an uptick there as very clearly from our side perspective.
Okay, fair enough. Suresh, TK in the press conference said that Europe and the kind of deal pipeline that Wipro is witnessing from Europe has never been as good as it is currently. Where really are we seeing the traction coming from? Because, you know, the last 2 to 3 quarters we were talking about Europe actually being sluggish, and now we have seen an uptick in Europe. Where is the traction coming from?
I think a couple of areas. We're seeing traction clearly coming from the big industries, the traditional industries out of Europe, primarily driven for us by auto and heavy engineering. These are the 2 areas that are actually growing for us. So apart from that, we also see some level of business coming in from services, but most of the incremental growth is being really driven by manufacturing. The way we see it is that with commodity prices going down, we are seeing a large part of the heavy manufacturing base being affected in terms of pricing. The price competition is happening out there, and people are trying to see how they can reduce their base costs. Because as pricing deflation happens for their products, they necessarily have to reduce cost on their overhead side. So that's really where the big opportunity is coming. And for the first time after many years, we're seeing a lot of Indian players participating in it. We're having our fair share of wins, and that's what makes it really bullish for us.
Okay, fair enough. Mr. Senapaty, a quick question on the overall deal pipeline. We've been witnessing some amount of commentary on how the deal pipeline would be lumpy, could be either flat to marginally down. Wipro seems to be positive from the commentary that we have heard over the last couple of hours. Going forward, your clients in developed markets and in emerging markets, are they seeing an uptick?
Surely. I think to start with our domestic home front, I think India is doing well. I think the initiatives taken by this particular government with respect to opening up the economy, making ease of doing business far superior, and the kind of projects that they're talking about in terms of a digital India, innovation India, skill India, FDI with respect to opening up all the varieties of segments, is definitely going to give a lot of momentum. We are already seeing that in the financial services. We are already seeing that in the oil and gas and certain other private sectors. And I'm sure as we get into the next fiscal, 15-16, a lot of government projects will come into play. Similarly, we are seeing a lot of positive momentum in Middle East. And US, as you know, market is doing well. North America, we have grown about 11%, and the pipeline looking stronger. So far as Europe is concerned, given the kind of currency pressures that they are, and the kind of growth being so muted, clearly there is cost pressure both in the United Kingdom and European Union. And that is definitely making them more opening up to be able to get into outsourcing. And hence we see a large play, because while they are developed market, somehow our penetration has not been as great. I'm not talking about the United Kingdom, but I'm talking about the continental Europe. And clearly we see, like Kurian talked about, the manufacturing, the auto sector have to be much more competitive in the current scenario, and therefore they are more open to outsourcing than they have ever been in the past. So as we go forward, clearly the US economy is doing well, we will see momentum there. The Indian and Middle East economy is continuing to be doing well, we will see. And because of the pressures so far as the European Union is concerned, we will see a lot of momentum there too.
It's time to wrap up in that case, and I take this chance, Mr. Suresh Senapaty, to thank you for your support over the years on CNBC-TV18, and you will be dearly missed on the channel and of course by all of us.